Texas engine never stopped. You want to know about it? Stay tuned for my next episode. Hi guys, thank you for joining me once again for another great episode of Commercial Property Club podcast. We have a report chapter 42 that we're starting today, and just like I said, the Texas engine never stopped. Well, my episode today is titled Texas Fundamentals in Apartment Development. That shows an optimistic forecast in 2026 for investors. I'm sure you want to know what the forecast says. My name is Ola Ebiwoye. I'm your host today. Talking about the Texas engine never stopped. I'm talking about what is really happening in Texas when it comes to the fundamentals of apartment development. We're going to see some aspect that tells us that indeed we are entering a facet of the market that we can afford to ignore here in the Texas area. The Texas engine never really stopped when it comes to apartment development here in the Texas area. Today we will be looking at some parameters that I feel we should take note of so that we're not going to miss the tide of what is coming as regards to apartment development. Now, if you've been reading the national real estate headlines over this period of time, the last 12 or 18 months, you've probably heard a lot of noise about the fact that there's been some oversupply in the Texas area. The rents plateauing in terms of growth. The market's cooling off. Well, it seems like the national commentators just love to lump every market into one bucket. That's how you want to look at things. But if you're an investor, a savvy investor that has been involved with the Lone Star State, I'm talking about Texas, you would know better. You know that Texas doesn't follow the national scripts. We write our own script here in Texas. Yes, we do when it comes to the apartment investment niche. As we move, let's dive deeper into 2026. The real story isn't actually a slowdown. It's a massive fundamental backed setup for historical run. When you look at the fundamentals, you're going to see that we're really entering some massive opportunity section of the year. In today's episode, we'll be breaking down some core Texas fundamentals in apartment development. We're going to be looking at the massive demographic tailwinds, the realities of shrinking constructions pipeline, and why the macroeconomic indicators are pointing towards an incredible optimistic forecast for the multifamily investing terrain in 2026. So grab your notebooks. You're going to need to take notes in this particular episode because we're going to be looking at some raw data that would really make sense for us to look at the holistic trends of things in the Texas market. Let's look at the demand and also the core demand. I'm talking about what it means, when it comes to real estate. You can but to really look at how real estate works. The scale balance of demand has to always be taken into consideration. Let's look at the demand core of population and jobs. Let's start with the absolute bedrock of real estate investing, which was what I just mentioned: demand. You cannot build apartments successfully unless people are moving to your market and finding jobs. And on this front, actually, Texas remains an absolute powerhouse. Let's look at the demographic super cycle going on in Texas right now. Texas is currently absorbing in the ranges of over 1,300 new residents every single day. That's huge. Let that number sink in. 1,300 new residents on a daily basis moving in to Texas. That's talking about organic growth, the domestic migrations from states like California, places like New York, places like Illinois. The state's population expansion has been just staying steady. It's accelerated also to in the year 2026, the first part of 2026. But it has not just about it, and this is just not about numbers of people. It's about who they are. Let's look at the deep confluence of who these people are. The median age in Texas is roughly 35.6 years old. That's significantly young than the national average, actually. We are talking about prime household formation years, young professionals trying to grow their families, tech workers who are structurally predisposed to renting with their disposable income. You can but to take note of the aspect of population. Obviously, that gives room for growth on the aspect of also to talking about job seekers. Now, let's look at the corporate aspect of things. Who are the corporate giants? Who are the corporate magnates in the state of Texas? What does this really mean? Why are they coming to Texas? Because the corporate migration machine is still on fire. They're firing in all cylinders. In the first quarter of this year alone, we've seen continual expansion in the tech industry, the energy industry, the healthcare industry, and also too, when you're talking about the aspect of logistics across Texas, you've seen expansion in all those areas. Corporate giants are moving in mass into the Texas area. I'm talking about the Dallas-Fort Worth area, even the Houston area, the Austin aspect of things, the San Antonio aspect of things. We're talking about the four triangles of growth in Texas. When a Fortune 500 company relocates from places like California, New York, just like I mentioned, it does bring in the footprints of its growth into places like Texas. They're not just bringing in the executives, not only high corporate ladder guys, they are creating thousands of middle income and also white collar jobs, skilled labor jobs. These are people who will fill your class A and your class B workforce housing. I'm talking about apartment development. In this spectrum, those are the sets of people that will come in and occupy your leases. The fundamental engine of demand in Texas is quite robust, organic, and self-sustaining. This will go on for a number of years. That's my focus, and it's not slowed down. We've seen migration to Texas that has really helped the apartment sector of things. So if you're an apartment investor, take note of this. Now let's talk about the supply equation, what I call taming the waves of supply. Let's address the counter argument that keeps people up at night. The year 2024 and 2025, you could say there was an oversupply in terms of development. Yes, there was. Developers were just building historical numbers of units over those years. Even the last 3 years, Texas City led the country in completions of the units that were built. We built so many development in the Texas area. But here is why 2026 is completely different. It's going to play a different ball game, actually, why the forecast is overwhelmingly optimistic. Because when there's an overbuild, there's this aspect of carefulness in which the rate of absorption too has to be considered in terms of the numbers of units being built. We're talking about the construction cliff, which is real because of capital market tightening, high construction loan interest, also to the elevated material cost of 2025. New construction stats completely fell off the cliff because of the overbuild. Now, think about the timeline of apartment development. Most times your project will, I'm talking about from breaking the ground, it takes about 18 to 24 months to deliver a full completed development, because almost nothing starts construction 18 to 24 months ago. The supplies reach its peak, making it rapidly tightening right now into the early parts of this year. Now, absorption is outpacing delivery right now. In markets like Austin, the Dallas area where we reside, the massive waves of 2024 inventory is already like 85% to 90% absorbed. Now that's good indication, actually, when 80 to 90% of absorption is getting to that kind of zone. The upcoming supply deficit, actually, which means that we're looking at deficit coming in. As we look at the back half of 2026 and projects that are going into 2027, Texas is actually facing a looming undersupply of new apartment units. That's the balance I was talking about. There is going to be a dip. That's all I'm saying. If you're buying or stabilizing an asset as of today, as of this period, you are entering the market right as new competition does really vanishes as we're looking at them. That is the exact definition of perfect timing when it comes to value add or opportunity to be a player in this time of the cycle of things. Oversupply, like I said earlier on, has deepened, so the absorption rate is higher right now. So obviously there's opportunity for value add, and there's opportunity to dive in before the prices starts going back up. So let's talk about operational tailwinds, rent resurgencies, and pro-business policies that might be taken into consideration. Moving from macro numbers to property levels, what are we seeing on the ground regarding operation in 2026? We see that there's a lot of rent growth resurgency, actually, after a period of flat or slightly deepen into the negative aspect of things of rent growth, where landlords had to give even concessions sometimes like a month or to complete with to really compete actually with new builders. Actually, the leverage has officially shifted back to owners now. So we saw in Q1 of this year, 2026, we see asking rent across the Texas Triangle trickling upwards of 2.5% to there about 3.8% year over year. Depending on the submarket we're talking about, actually, you're gonna have to deal with each market and look at the rates in between these gaps that I just mentioned. Concessions are burning off rapidly Yes, they're burning up rapidly, meaning your effective net operating income is going to be expanding, already expanding as it is right now. Now, the Texas regulatory advantages also too has to be taken into consideration. You cannot but talk about Texas fundamental without talking about the regulatory aspect of things, the taxes that are in the environment of apartment investing. We're talking about Texas. No state income taxes. Yes, that's an advantage. This continues to act as a permanent raise for out-of-state workers moving in, actually, giving them more discretionary income to allocate towards leasing, towards their rent. So that's a bonus, actually, for the influx of the population coming in from all the states that have state taxes, inclusively with federal taxes, but Texas has nothing like that, so there's more space in terms of discretionary spending. Now, what can we look at, or what can we consider when it comes to pro-landlord framework of things? We're pro-landlord in the state of Texas, unlike other states that implement strict rent control laws and lengthy eviction moratorium. That can be really bothersome. Texas maintains a balanced pro-business legal frame. I love it. Texas is one of those states that landlord friendly for us investors. It's really a good balanced, organized frame of things. Now let's look at development and zoning. While major cities have structural orders, Texas remains a relatively friendly environment for infrastructural developments compared to some markets, your coastal markets. This keeps the barrier to operational efficiency low. This does help us as developers, helps us as investors when it comes to apartment development. We can but to say that Texas still remains very friendly when it comes to apartment investing, entrepreneurship for investors. So what's my take for 2026, the second half of 2026? Here's my playbook. How do you take this optimistic outlook and turn it into actionable returns? Here's my 2026 Texas playbook. Number one, target the absorption submarkets. Look at the areas that were heavily hit when it comes to supply in 2024. The likes of your Austin, the likes of your North Dallas axis. I'm talking about Frisco, Plano, McKinney, those parts of province in the Dallas area. The narrative says they are oversupplied actually, but the data says they are absorbing units faster than anywhere else, and that's the truth. These are places that I would normally drive through, and even on my daily commute, actually the absorption is quite on a good level of absorption. So indeed, those are areas you want to look at before the rent spikes heading towards 2027. Number two, focus on Class B value add. Right now, those are places that can actually give you yields. The gap between buying a home in Texas and renting an apartment has reached an all-time high due to elevated single-family mortgage rates. The demand for clean, safe, well-managed Class B work housing is actually practically bulletproofed right now. So there's a lot of people renting, leasing more than buying homes in this particular area I just talked about right now. Number three actually, lean into efficiency. Now I'm talking about operators right now, groups managing apartment investment right now. Use the operational predictability of Texas to institutionalize your management. In other words, upgrade your assets with a lot of upgrades like your smart home technology, tools or kits. Optimize your energy footprints and drive your operating expenditure down, while your rent naturally also too climbs up in terms of bringing down your expenses so that your net operating income can push up. After all, that's the goal of investing in apartment as an operator. So my conclusion, the big takeaway for today is simple. Do not let the national headlines dictate your local strategy. That's about it. The Texas apartment market isn't broken. It's just taking a breath, absorbing a massive wave of growth, and now it's gearing up for the next major boom, actually. So position yourself strategically. With national leading job growth, you can't beat that. A rapidly shrinking construction pipeline, you can beat that. Rent turning positively, that's also a good thing. 2026 is shaping up to be a legendary vintage for multifamily real estate investors like us, who have courage and clarity to execute what it takes right now. I'm talking about right now. If you want to look at some of the data models we discussed today, or if you want to talk about specific value add opportunity we are tracking across the state of Texas, just join the conversation here at Commercial Property Club. Head over to our website, www.commercialpropertyclub.net. You can send me an email, ola.i@commercialpropertyclub.net. Don't forget to subscribe on YouTube also too. We have a YouTube channel, Commercial Property Club Podcasts. Leave a review, share with somebody somebody out there growing their portfolio this year or trying to get into apartment investing. You can also connect with me on LinkedIn, on Facebook, and also too on Instagram. My Instagram handle is Commercial Property Club. That of Facebook is ST7 Investment. Of course, Commercial Property Club is an affiliate of our ST7 Investment group. I am Ola Ibiwoye. Thank you for tuning in today. Keep adding value. I will see you in our next pod chapter. Have a super wonderful week.